Hey guys, this is Jason Jenkins, founder and head trader at Jenkins Research Management. I'm doing an update for everyone that's interested in the crypto space, for those that are on my crypto trading group, that are on the crypto team. I mean, man, what a week for markets as far as the digital space. I mean, this is the most exciting market to trade. I mean, I was trading the bitter end of the fixed income move to low rates, 5,000 year low interest rates. And let me tell you, in fixed income markets, people were miserable, and they still are miserable. There's not a lot of markets that have this much energy, given everything that's going on, global macro, all the central planning, yada yada yada. But talk about, I mean, guys, in 1 week we saw Bitcoin, the majors, Ethereum, Litecoin, absolutely just go no bid, right? Steep sell off Sunday and Monday, and then turn around and basically retest the highs. I mean, if you're a trader, this volatility is, I mean, it's absolutely amazing. So let's just review what we talked about coming into this week. And then here we are. I like to do these videos. I like to talk about this stuff. You got to pay attention to your weekly closes, your monthly closes. That's the stuff that matters when you're trying to identify a long-term bull bear market, right? The closing candles matter when you're trying to identify the trend and you're trying to identify where markets might be breaking or changing direction. So we like to look at 3 time frames: long-term, intermediate term, and day trade or micro time frame. And all our same cycle work applies, all our same trend work applies to each one of those 3 different time frames. And they're separate, they're fractal in nature, which means the same patterns repeat on a smaller time frame as they do the larger time frame, and they're self-similar. I teach all this in my trading model and process. I teach my guys all this stuff. You can learn about that at JenkinsRM.com if you're interested more in the model. But specifically, I just want to talk about where we were coming into the week and where we are now to close out the week. You got to do your due diligence, do your analysis at the end of the week, and that kind of sets you up. You know where the market is. You kind of are anticipating you're all ready to go on Sundays. I mean, I guess these markets trade all weekend long, but that's just a habit that I've gotten into over the years as a professional trader, and that's what I teach my guys, the same habits. So, guys and gals. But look, guys, this was pretty simple textbook trading in our model. So we've been talking about these higher lows is what you want to watch for. So this is a long-term bull market. You'll notice here, Bitcoin, this higher low is right in front of 2200. All right, we've had some nice cycles in and around that average. So again, for those of you that are new, you have to start to understand time in your trading. That's the path to consistency. Is you got to get away from just fundamentals, just technicals, and understand that there's a cyclical component. And the dimension that we live in, time, is the 4th dimension, and it affects everything around us. Everything in the universe, it's the same in markets. Everything cycles, your heartbeat to the way the energy travels from the sun. It's all cyclical. All right, so that same energy flow is in the markets, and you're not going to get away from that. I don't care what you're trading, because it all is still within the constructs of time. So you're going to get these ebb and flows. You're going to get these pendulum swings. Every time we had a cycle low, we had it on a nice run. Okay, this is just one example in Bitcoin. Cycle low, nice run. Cycle low, small little run up there, but still, nonetheless, there's an ebb and flow there. Okay, and look at this cycle down. What did we have? Lower than the cycle. We were buying. Okay, this is just based on the cycle. Boom. This isn't overbought, oversold. I'm not talking about price. This is cyclical analysis. This is understanding the rhythm of time. If you guys are musicians, you understand that. There's a rhythm. That's what we care about when we look at the cycle. All right, an RSI shows you oversold. Okay, there's lots of ways you can read oversold, overbought. You can look at angle and distance away from a moving average, but this was just a simple. I don't need an RSI to tell me that we're oversold. You drop from here to here, you're oversold. But this was a nice reading down there also. Um, but just an amazing move. So some of that is distracting. I like that it pops up the headlines. It's a little bit distracting on the chart. So anyway, we break this higher low, what we call the bands here. These moving averages I put on the chart. I call it wave formation bands. It shows the trend, pretty good visual. You break this right here in our model, you tend to get a deeper pullback back towards the 200 and or pi. Now obviously it doesn't happen like that exactly, but the point is that when you break trend like this, or what we call TMS, you get the bigger pullback. And so we did get the move back towards the 200. And then I was highlighting this whole area. I've been teaching you guys, level specific trading can get you in a lot of trouble. If you are selling short because you broke this low, and you are selling short again because you broke this low, congratulations, you ended up selling pretty much the dead ass low. That's how you get yourself in trouble. You have to put it in perspective where the markets come from, where you're oversold. But this isn't an area where you want to be shorting. This was an area that we were buying. And so I've always said this is like the rings in a boxing ring. You can bend, you can go up against the ropes, right? They give. Well, this is a whole area that you wanted to be looking to buy, and sure enough, you plugged into it and then you ripped out of it. So this is a real money candle in my model. Traders know this is one of our 7 execution setups. This is very bullish. We had a nice, after this candle, we retraced about halfway. I wouldn't be surprised if we bounce from here. But just an amazing move. I mean, to to break here, make a new low, and then rip to basically retest the old high all in 1 week is just phenomenal trading. And this just shows you the amount of energy. And when this thing, whatever the catalyst is, guys, we don't, again, that's not the way to trade, to chase headlines. If you were chasing the headlines, you were probably selling on because you were all worried about the SegWit and the fork, blah, blah, blah. That's not how you time and trade markets. As soon as that reverses, the market just rips. That's just a sign of a bull market. I mean, when you have good news, the market just explodes. So there's still all kinds of demand here. Just a very explosive move. So from here, guys, I mean, I want to pull back. I really wanted to pull back towards here and back towards a full pi cycle to get even more aggressive. But that's okay. We'll just trade it. So from here, the next pullback is buyable. You might have had it here this afternoon. But if we get any kind of further dip on the 4-hour with the cycles, just like we do on the daily here, you do it on the 4-hour and the hourly, that's where we'll be timing our trades. But still better buyers, great start to the week. We were buying down here. It's a good call. I proved to I mean, guys, this is just, I've been talking about this area, drawing, putting it live. We talk about it in the room. That was a great call. So, but it's fun trading. This market's just exciting. It really moves, it whips around. That's the kind of energy you want. So it's glad to see that in some markets. A lot of other markets are just kind of dying on the vine, to be honest. It's just totally different. So anyway, guys, have a great weekend. Be safe. We'll talk to some of you on Sunday.